On this evening's program, the Case-Shiller Home Price Index was down 4.5%, but stocks shook it off as in Abu Dhabi forked over $7.5 billion to Citigroup. Wow. Oil prices fell over $3, gold dropped $12, 10-year bonds closed $3.95, and the greenback was steady. And with a strong last-hour performance that could well spell a bottom to this correction, the Dow rose 215 points, closing at 12,958. Broad indexes up about 1.5% across the board. And maybe the growling bear recessionistas will shut up for at least one day. Let's dig in now. Joining us is the aforementioned Robert Shiller, economics professor at the Yale School of Management, chief economist at Macro Markets. We have joining us Dolly Lenz, vice chairman of Douglas Elliman and #1 on the Wall Street Journal's list of the top 200 real estate professionals. We also have Jeffrey Kleintop, chief market strategist at LPL Financial Services, Mark Skousen, author of Investing in One Lesson and editor, Forecasts and Strategies, and Michael Pansner, Wall Street trader, author of Financial Armageddon, the most cheerful bear I know. Rumor has it he's actually a short-run bull. That is totally awesome. Robert Shiller, down 4.5%. Give me your overview. What did these numbers tell you?
Well, it's not a big surprise. The market has been weakening for a couple of years now, and so it just continues to worsen. But it's on track for now. The big question is, will there be a reversal like there was in the 1990-91 construction, where prices kept getting worse and worse, and then suddenly they leveled off?
You know, Bob, you come around in the month when these things are out, and we really appreciate it. When you go down the list, the big losses, you got Tampa, Miami down in Florida, you got San Diego, and you got Detroit. That's an auto problem. I really don't think that's so much a housing problem. Then you got Vegas, Phoenix, Los Angeles. California accounts for 27% of the drop, Florida 5% of the drop, plus the Detroit thing. It just seems like this is not as widespread. I mean, some areas like Charlotte and Seattle and Portland and Atlanta and even Dallas are actually rising. Is this truly a national phenomenon, or is it the speculative second home, day trading, vacation places, plus the automobile problem?
Well, it's looking more like a national phenomenon than it ever has before. In this latest month, every one of our 20 featured cities declined, including Charlotte and Atlanta. And you're referring to the 12-month increase. So Charlotte is still up for 12 months, but it's falling in the latest data. So is it national? You're right. You're looking at the biggest and most... it tends to be glamour areas. I think Florida, California are glamour areas. And in those big cities, in those areas, prices went up a lot, and so they're coming down more than in other places. But it is somewhat of a national phenomenon. It's declining everywhere in our data.
All right. So your basic take, as I understand it, is that it's getting worse. It's not stabilizing. It's not getting better. It's getting worse. That's your basic take, Bob?
Yeah, and the Consumer Confidence Index that was just reported confirms that. People are not gaining confidence at this point. They're hearing about the market, they're hearing about the subprime problems, and it's not a good moment for the real estate market.
All right. Dolly Lenz, you heard Ms. Shiller talk about the glamorous areas. We're a glamorous show, therefore we have a glamorous realtor like yourself coming on, and we appreciate it. There's a great story in the Financial Times, Dolly, and I want to ask you about this. The headline reads, "Dollars' woes yield Manhattan bargains." And yes, they're talking about condominiums. It also says that because of the dollar drop, foreigners are investing in real estate in the United States. They single out places in Miami and Fort Lauderdale Beach and some in Southern California. Let me ask you, first and foremost, in New York, how do you see it?
I see New York as two separate markets. One market I would call the over $20 million super luxury market, and the other market I would call the below $10 million market. And I'm not sure what to call the 10 to 20. But in the market below 10 million, we're finding foot traffic greatly increased. We're finding sales at a higher pace than expected and higher pace than last year. It's really a good market. Inventory levels are low. Everything bodes well. In the over $20 million market, surprisingly, we're seeing people a little cautious. and asking the question why versus why not in terms of a purchase.
Is that because of the, let's say, the hedge funds and some of the big investment banks have suffered setbacks in the wake of the subprime loan problems, the markdowns, the end of the private equity boom? In other words, is it a financial industry thing that's causing that weakness?
I think New York is really based on the financial industry, and yes, I would attribute it to that.
Now, are there pockets of strength that you see that have surprised you? And let me ask you, in Mr. Shiller's Case-Shiller Home Price Index, New York is scored as minus 3.6 in prices over the past 12 months. Does that jive with you? Just call it a drop of 4%. Is that about right?
It certainly doesn't jive with New York City, meaning Manhattan specific, or the Hamptons. But it probably, if you aggregate, you know, the Bronx, Staten Island, etc., it probably is correct.
All right, so Mike Pansner, I want to bring you in because I know you're in the $10 to $20 million range for buying this real estate.
Yeah.
What is your current thinking on the market? We had an excellent day today. In fact, the last hour closed up. Somehow stocks overcame the Shiller price decline. There were some other pieces of good news, such as the rescue mission for Citibank by Abu Dhabi. What's your latest thinking, Mike, and what do you think about this real estate story?
Well, I mean, there's two issues here. One's clearly a structural long-term phenomenon when you're talking about real estate. I think on a day-to-day basis, the market is watching it. I think it will cast a shadow longer term. But in the near term, you know, sentiment is what drives markets. You've got pessimism among individual investors and among all sorts of higher-level investors at, you know, 1 to 3 year lows in some cases. You've got the prospect of a Fed ease coming up. You've got this past weekend's retail sales data didn't go below the worst-case scenario. And, again, you've got a lot of bad news factored in, and I wrote a column today for Real Money suggesting, you know, we could see an early Christmas rally. I think the next couple of weeks could be good for the bulls.
This makes me very nervous. I have to tell you, you know, this whole stock market correction began when Dougie Cass appeared on this show a few weeks ago and was bullish about a year-end rally. And almost from the nanosecond he uttered those words, not only did my heart sink, knowing Dougie, who's a great guy, but he's had some trouble with market calls. But sure enough, it all got slammed. Now, Mr. Pansner, I loved you as a bear. I came to love you as a bear. You do it so cheerfully. You're such a classy guy. Are you sure? And where is all this bullishness coming from?
Listen, Larry, don't get too excited. It's only going to be a couple of weeks. You know.
Kleintop, Jeffrey Kleintop, listen to this guy. I tried to get him, you know. I thought we had a real turning over of the hands, a new leaf for the new year, Jeffrey. And weigh in on what you've heard from Mr. Shiller and his falling home prices and the glamorous Ms. Lenz, who says actually, at least the New York story, ain't that bad.
Well, gosh, I mean, isn't it all about affordability? So prices have come down, absolutely. But you know what? Rates have come down, too. In California, you can get a 30-year mortgage for under 6%, and incomes have continued to rise, up 6 or 7% in disposable income.
Incomes are rising?
Believe
Isn't that
it
a
or
bullish
not.
thing? That's an anti-recession thing.
Absolutely.
Really, incomes are rising. That's extraordinary because everything I've heard in the last 5 trading days has been total gloom and doom centered around subprime and Mr. Shiller's falling home prices. You're saying there's a piece of good news out there?
Oh, absolutely. You know that. Rising incomes, falling interest rates make housing more affordable. That's why I don't think we need to see dramatic declines from here. And let's face it, only about 5% of this economy is in recession. That's housing. The rest of it continues to boom. We get new data almost every day confirming that.
Before I get to my pal Mark Skousen, I want to go back to Dolly. You heard Jeff Kleintop. The drop in interest rates, Dolly, is that making financing a little easier?
You know, it's interesting. It is making it a little easier just in the recent week or so, but because people have to put down larger deposits, that's not the best part of the market.
So, Mr. Shiller, that plays into your scenario. Credit is pretty tight and really not all that available.
Yeah, I don't see any reason to think that this housing market isn't going to be continued weak for years and years. Maybe not Manhattan. Manhattan is a special place.
I agree.
Everyone agrees on that.
Well, what about New Haven? You live up there in New Haven or someplace near New Haven? Is New Haven as special as Manhattan?
No.
Yeah, no. Amen. Amen to that. But whatever. All right, Mark Skousen, you've heard the panoply.
Yeah.
You've heard the panoply of views here. There is some optimism for Mr. Kleintop. Mr. Pansner is turning short-term bullish. Mr. Schiller says it's going to be years. Ms. Lenz says there's hope. Where do you come out?
Well, one thing that I am concerned about, and that is this story that came out today about the Arabs injecting money into Citibank. It reminds me, remember Bank of America just several months ago injected $2 billion into Countrywide. And look what happened. The stock was at $20, and now it's at $9. So these one-day rallies I'm concerned about. We've seen one-day rallies constantly, and the question is, are we going to see any follow-through? And the follow-through has to come from the Fed policy. It has to come through corporate profits. We've talked about that before, corporate profits.
We're going to get into that in the second segment. We're going to, but let me ask you something.
Yeah.
Let's look at Abu Dhabi for a minute. I have no idea what the condition of Citigroup is. Truly, I don't even want to speculate. It reads bad. They don't have a new CEO.
Well, they're cutting jobs. They're doing the downsizing.
Yeah, okay. But the bigger question is, the OPEC Arabian countries are just sitting on unbelievable piles of cash. They have so much money that they could even make Dolly Lenz's year if they chose to come into the Manhattan real estate market or, heaven forbid, go out to the East End in Long Island. Where should they put their money? What's wrong with them investing here? Do you think this is going to be a political problem?
Well, yes. I mean, there are some congressmen, Democrats primarily, who may start complaining about this. But look what they're doing. They're buying Canadian Oil and Gas Trust. The Arabs bought Prime West a month or two ago, and it seems like they're moving in, and that's what they should be doing.
Wow.
I mean, that's,
you're a free trader, aren't you?
Yeah, I'm a firm believer, and it should go both ways. It should go, we should be able to buy Chinese companies buy our companies. So there's the quid pro quo needs to be in the trade, in the free trade that we're talking about.
It reminds me of the immigration argument. When we talk about immigrants coming into the U.S. to do the jobs that Americans don't want to do, now we're having foreign investors come in to buy assets Americans don't want to buy. We should welcome that. It makes us more productive, stronger as a nation.
Dolly Lenz, any OPEC producers been buying Manhattan real estate?
Many, and many Italians and many other foreign groups, as you suggested in your first comment on the Financial Times story.
Yeah, it's a cheap dollar. I mean, it's got some negatives, but it's also got some benefits. Professor Schiller, you are a stock market historian and expert. Are you bull or bear right now on stocks?
I think that we're in for a risky period. We saw earnings growth at practically record levels for the last 5 years. They've been shooting up, and now they seem to be looking iffy. And so that puts, to me, a lot of uncertainty in the market going forward.
All right, well, that's an important point. We're going to get to the profit story. I agree with you. That's a very important point. Everybody's going to stay with me for a good long time. Next up, we have Paul McCulley of PIMCO.